Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Monday, February 22nd. Okay, if you're watching the video, you've probably already checked out futures where we've got some pretty decent red figures going. It's a little after 6:30 in the morning when I'm starting the video, and at this time I've got NASDAQ futures down 1.3% and ES and small cap futures down about 0.8%. So what you might want to do is get some pen and paper handy, because I'm going to try to walk you through some key thoughts for today, and those might be helpful later on. Before we dive into the charts, let's kind of think about where we've been at. The title of today's video is this the beginning of a sinister move lower? And if you've been with me for any amount of time, you'll know that I try to stay away from predictions like that. You know, this is the start of something big or it's not. We just don't know. But what we do know is, in order to have a sinister move, price has to break the 20, which it's still above, you know, as I write this, or you know, open this morning. And then the next stop is the 50. And the last time we had a little swoon, the dipsters came in strong at the 50. So if the 50 holds, which it has, then that's not a sinister move. That's nothing. Now, if the 50 breaks, then we can start talking about sinister moves. So what I'd like to do and have you focus on today is the key levels, right? We go level to level. We try not to get all emotionally involved with, you know, everybody that's been calling for a pullback or whatever. We know the dipsters have been strong, but we also know bullish sentiment has been on the moon for weeks, if not months. Everybody is long, right? From hedge funds to retail, everybody is basically max long. We know that short interest is at record lows, so that opens the door for a more substantial move, because there aren't going to be any shorts out there to buy or cover their positions, which tend to act as air brakes on the market on any kind of big move down. When they start to cover, you know, that's buying. So there is no short interest, so there's not going to be those air brakes. And then we talked about rolling out of February OPEX, which was Friday, was going to open up the possibility of increased volatility after all that gamma pinning and call walls and put walls. A lot of that stuff has rolled off, so now there's more of an opportunity for technical selling, because those factors are not in play. And we've talked about again and again that the week after an options expiration can serve as inflection points in the market. So we're going to have to see. We're early on, you know, we're 3 hours before the open, so anything can happen during that period of time. So let's dive into the charts. We've got a lot to go over, and I'm going to give you the levels to key off of. All right, SPY daily. Notice that we've got a bear cross about to execute on momentum. RSI is still fine, well above 50. So a break of RSI below 50 would tend to confirm or lead you to believe that more downside is ahead of us. And once PPO crosses here bearish, then usually you see a down cycle before there's an upturn. So on this chart, the brown line is the trend line off the March lows. And you can see here, you know, we've got the 20 in blue and the 50 in green. So key off on the daily chart, key off at 385. I think that's your daily pivot. A break below 385 would favor a move down to the 50. And we're talking about closing prices now, remember, on these charts. So, we could have a look below this morning that gets bought up, and then, then it closes back above by 4 o'clock. So for this daily sell signal to execute, I think it's got to be a close below 385. So let's drill down to the lower figures here. Here you can see we've been consolidating along the top within this channel, and then last week, towards the end of the week, we broke below, had a couple, a good day, and then finished a little weak on Friday. And then we're going to have the big gap down this morning. And here's that 385. Notice the void, right? Not a lot of transactions here. So we're gonna open down in this 385 area, leaving a big gap above. So this morning you got to be cognizant of two things. Number one, there's a big gap above, right? And that's an opportunity for these guys to, gun it, run up and fill the gap, then roll over. So, when the bell rings, refrain from, piling in short until we see, how they treat that open. So I think, again, a good level is going to be 385. If they gap down and then break below 385, I think you can get short for a tactical trade looking for 381 as a first level of support. If they break below and then recapture 385, remember, recapturing a key level from below is bullish, then you can get long and see if they gun it to fill the gap, and that would be a nice trade as well. That's $4 move. So there's a potential $4 move higher and a potential $4 move lower down to 381. So I think 385 is going to be a really nice level to shoot against, either on the long side or the short side this morning. Here's the consolidation along the top. We'll have the gap down this morning. Notice that the gap down is basically equal to the width of this consolidation box, $4. So we go from 389 to 385 on that measured move, and now the decision point will revolve around how price handles 385. Qs. Daily chart. Nice uptrend channel. We got the 20 right below price, and we've got the 50 down here towards 319. I think your level on the daily chart is 328.50. That would put price below both the 20 and the trend channel, and that would be your daily sell signal on a daily close below 328.50. Here's the 2-hour chart. The numbers are a little bit different here just because of the way the channel was, but we're going to open down in this range here, 326, 327 area. Notice the gap that is there that remains unfilled. If we get a down move after the open, I think there's the potential for this gap to fill. And remember, top of the gap is always a good level for support as well. So, but the Qs have been the weakest. We're going to get into the FATMAAN names, the FANG names plus Tesla. And we've been noting how weak they have been. So if those remain weak, I mean, they're the top 6 names in the market. And if those things are heading south, it's going to be tough at the index level to, hold the ground. So, your sell signal on the 2 hour is going to be the break of this channel. And I would use, 327 there. And here we are on the 30-minute chart. I've got that level at 327.50. So I think you handle that the same way you do on SPY 385. Big gap above, that will be left to fill, and then room below if they take it, lower out of the open. IWM, daily, nice uptrend line. I think your key daily level on IWM is 217.50. If 217.50 breaks on a daily closing basis, you've got your daily sell signal. That would put price below the channel and below the 20 and would target the 50 down at 208 as a next target. 2-hour chart, these are just the levels, pretty much the same. I've got a level here at 218, which doesn't look exactly right. I think you could bring that level down to 217.50, looking at it a little bit closer there. And here's the 30-minute chart. So there's a gap here at 222 down to 220 and a half. I would expect that to fill. I did not look to see where IWM was trading in the pre-market, but I would key off of this gap. And, as long as 222 holds, the damage will be contained. But if we break below this 220, then we're probably going down to this 217 and a half, which is the, on the daily chart, the most important level. Facebook, bad day on Friday. They really pulled the rug on this hard. Rejected 270, lost this 268.25, lost 265, lost 263, and came down to tag this 260 level. I looked in the pre-market and price is already below 260. Probably going to open here in no man's land. I think you got to wait till 260 is either reclaimed or is rejected. So that'll be a good trade location. Or if they pull the rug off the open, this 254 becomes a good pivot point for you, because below 254, you're down in the 250, 248, 246 range. If they manage to hold it here, there's an opportunity for a gap fill higher. So key off of 260 and 254 on Facebook. Apple, use 127 as your pivot. I looked pre-market and price was hovering just above in the pre-market. If they take it below 127, I think you can be short and look for 123.50. That's the level I have for a downside target there. As long as they hold 127, then there's an opportunity for them to, run it up to 130.50 and close that gap. But Apple's been really weak. That doesn't mean they can't fill a gap higher. But if they do run it up to 130.50, that's a very objective place to initiate a short. If they pop it, then you got a paper cut. But if they just make that technical move to fill the gap and then roll over, then you've got a nice trade on your hands if you were to get short right on the top of the gap fill. Tesla. I did not look at this pre-market, but you can see that there's a gap all the way down to more or less 752.50. I assume it's trading down in the pre-market, so there'll be a gap above and room below to fill the gap down to 752.5. Below that level, I think you'd find 735 pretty quick if it lost the bottom of the gap. So that's what I see on Tesla. Microsoft in the pre-market is battling this 238 level. And you can see the nice volume over price bars that have been established during all this consolidation. And once you drop below 238, we go into a price void where I think price would move fast. So I think 238 is a good pivot level for active traders. As long as that holds, there's a chance for them to run it up to 241 to fill the gap. But below that level, I think you could see 231 just because there's, this void, and support is not going to come in until way down here at these prior lows at 231. Amazon. For the free 50 club that we've been talking about for months, worked out great on Friday for those that were participating and actively trading. We opened above 3,300, and then when we dropped below, that was your short entry trigger below 3,300, and then you got the free 50 into the close, right? Went straight down to test that level. And so this morning in the pre-market, price is down here around 3,200, testing that level in the pre-market. So like all the other charts, there's going to be a big gap above and then room below. Notice this big gap here from 3180 to 3120. That's 60 bucks. So if price loses 3,200, I think you can be short and hope for this gap fill, and that would be a great trade. Be prepared at 3,180 for a potential bounce. And if you wanted to, this might be a strategy. Give up this 20 bucks from 3,200 to 3,180. Just let that go, and then use the gap as your entry trigger. So if price came down here and held at 3,180 at the top of the gap, no trade. But if it breaks below, then you can get short with a stop just above and go for the gap fill, $60 lower. Google had really been one of the better looking charts in the FANG names, but closed back in the trading range on Friday, which is never a good thing. We had talked about wanting price to hold 2,100 to keep that door open to 2,200. Now 2060 is going to be a level to hold. Otherwise, this big gap comes into play right at like 2038, something like that. So key off of, I'm assuming this will gap down here. So if you're not in it, I would be keying off of 238 for this big gap fill down to 1920. That's over $100 right there, if my math is correct. Yeah, $110, something like that. that would be a great trade to capture if things fall apart. Netflix used 535 this morning as your pivot, with the knowledge that there's this gap here below at 530 down to 524-ish. If that fails, if they fill this and then go lower, then your next key level is 515 at the top of this next gap, which is $12 wide. So you've got some really nice levels here to stair step your way down if that's what they're going to do. And just like everything else, there's going to be a gap above that has the potential to be filled if they decide to gun it and give everybody that false belief that they fixed it. So I think today, just given the open, you gotta lean towards the bearish side. But if you go to the notes that I wrote in the blog, and if you're new to the channel, you can get a link over in the show notes to the blog, and also a place to register for my content, which would be great because I send out midday notes on what I'm seeing, and you'll get those in your email box if you register. What was I going to say? Lost my train of thought. Oh, let's talk about strategy for today. I assume, like I'm long. Okay, I don't have any hedges in place, but we're in some, cyclical names. We're short TLT, so TLT's down today, and we're also in some reopening names, and I don't expect them to get killed today. What I expect to get killed is the high flyers, the high flying tech names, along with FANG. So I think QQQ is going to underperform, and I think IWM will outperform today. So depending on what you've got, if you see some levels start to break, or if your stops are hit on whatever names that you have, go ahead and take it off. And if you see, or we get those sell signals towards the end of the day, then you can layer in some short exposure just simply to hedge whatever longs you still have on, right? I don't think it's a time right now to just wholesale go in and close your longs and get net short. I think it's too early for that. But if we lose the 20, you kind of got to assume we're going to go tag the 50. And I don't think you want to be idly, twiddling your thumbs while that happens. I think you want to have some hedges in place. I think you want to, judiciously look at your long exposure and, make sure that's where you want it to be. If you realize you're in over your head on your longs, back out of some of them, especially the names that you're not really committed to. And then as the day unfolds, if it looks like things are starting to fall apart, you can put some hedges in that will cushion the blow if we do in fact make a run for the 50 in the days ahead. So I don't think it's a time for panic right now. It's a time for caution and awareness that just all the factors we've already talked about, just on the face of it, if bullish sentiment is on the moon and everybody is long and there's no shorts in the market, that's the recipe for a decent pullback. But we're also at record liquidity and a record dipster mentality that they don't even wait for the second red bar. They buy the first red bar and stop the bleeding almost immediately. So we don't know when the dipsters will disappear, if they ever disappear. So you don't want to go gonzo short and then have, the dipsters reverse it right off the bat. So we've got to we've got to walk that fine line between caution with our long exposure, but with the knowledge that the dipsters may not show up this time, because that dipster mentality works until it doesn't, right? You can't count on them stepping in. You got to be aware that they could, but you've got to protect yourself if they don't. So I think that's the posture today. Trade off the levels. Don't assume anything. And then trade level to level with your long exposure where you want it to be, and gradually add in some short exposure if it looks like some of the key levels are being lost. And then we can kind of gauge, if the dipsters are going to come rushing in or not. And then we can take it from there. So I hope those ideas are helpful. Like I said, I have a lot of confidence in my levels. I think you should trust them. I think you should trade and execute around them. And if you do that, I think you're going to have a good trading day. So that's all I've got. We're still 2.5 hours before the close, 2.5 hours before the open. So a lot of stuff can happen in the pre-market that, before we even open. I mean, they could rally it in the pre-market, or they could send it even lower. So, but at least we have the levels now, and we know our game plan heading in. If you're new to the channel and you found the information helpful, please hit the subscribe button and the alarm bell, and then look over in the show notes, like I said, a place to visit the blog site for additional information and helpful articles and topics for aspiring and seasoned traders alike. Also a place to register for my content. And if you do that, you'll get both an invite to our trading room and a nice email each and every time I publish content, so you won't miss a beat. This has been Chris Buss with Traders Profit Compass. Have a good trading day, and talk to you next time.